Hey traders, Jason here from Leavitt Brothers. Hope you're well. It is overdue, long overdue, to do an update of my State of the Market series. Okay, so overall, market went through a little soft patch there. Indexes pulled back. Breadth wasn't very good. It wasn't horrible, but it wasn't great. Individual stocks went through a little bit of a period where not much was happening, but a lot has changed. Okay, the indexes are doing great now. Breadth has improved a bunch. A lot of quant studies point towards, the next few months being good. Of course, we're getting into, seasonality-wise, the market tends to be good November, December, into the new year. I'd say the only thing off the top of my mind that is like really a big warning, it's not really a warning, but just something to note, is that there have been some big earnings blow-ups. Okay, some pretty good stocks, some stocks that have posted big gains over the last 6 months, 9 months. Have suddenly, gapped down and posted big losses. For some stocks like Peloton, it's not a surprise. The stock was trending down for many months beforehand, and as people get out there and live their lives and stop staying at home, not a surprise a stock like that would take a hit. But there are other companies that have actually taken pretty big hits that were kind of a surprise. All right, so in this video, I'm going to do a quick run of the weekly index charts. Then we're going to look at breadth. And then I'll wrap it up. All right, so let's get to it. All right, so here is the S&P 500 weekly chart going back almost 3 years. What can I say? Super strong, solid uptrend, just trending up, trending up, trending up. Look at it riding its 21-day moving average. Came down, tested the 21 for 4 consecutive weeks, and now we're at new highs. There's nothing wrong with this chart. No warnings whatsoever. The long side of the market is the only side to be on. If you question whether it can continue, that's fine. That's what stops are for. Okay, that's what stops it for. If you thought the market was way overdone over here, and you sold, you missed out on 500 points worth of gains. Okay, trail it with a stop and see how far it'll go. Here's Nasdaq. The net is just as bullish. I mean, we move up from the bottom left to the top right. That's an uptrend. So we got to move up here, consolidate for a couple months, move up, consolidate for even longer, move up, come down, test the 21, and now we're at new highs. Okay, no warnings here. The Nasdaq is doing really, really well. These dips, dip here, dip here. Dip here, dip here. Those are good, okay? I mean, it's actually easier to trade the NAS when it dips like this because those dips, they do two things. One, you get an opportunity to buy some quality stocks at a slightly lower price. And two, during those dips, the real leaders or the leaders of that time reveal themselves because they pull back a less amount than maybe a former leader that starts pulling back a little bit harder. So nothing wrong with the NAS here. Super strong, moving up. If you question whether it can continue doing this, fine, but that doesn't mean get out. It means just trail it with a stop and try to milk it for everything it's worth. Here is IWM, so it's Russell 2000 ETF. As you can see, it traded in a range practically this entire year. Okay, so it was lagging. By definition, it was lagging. And then just last week, it broke out on a pretty good surge in volume. You can see down here this week, a little bit off week, but fine. But this is great. This is really good for it to move up for basically a year, move sideways for 9 months or so, and then break out on volume. That's super bullish technical action. And then last one, here's the mid caps, same thing. Moved off a low, kind of consolidate there for a few months, steady trend up, consolidate again, and then we get a volume breakout. There's your volume. You get a volume breakout last week. So everything looks fantastic. So whether you're talking about the S&P 500, the Nasdaq, small caps, mid caps, everything is trending up. Everything is near its high. Everything is on board. Nothing is lagging. Market's in fantastic shape if you only look at the indexes. All right, now let's look at breadth. All right, here's the S&P 500 with the 10-day moving average of the AD line, and then the AD line is below. So just to point out, so when the market is healthy and trending up, the 10-day AD line tends to mostly oscillate up and down within a range above zero with occasional dips below zero when the market undergoes just a mini pullback. Okay, so this is typically characteristic of an uptrend. You can see we ran into a little bit of a problem here where we didn't have very many high prints, but we definitely had some lower than normal low prints, and that activity warned us that this was probably going to happen. The market, and that's what happened. The market pulled back, but since then, the market has trended, continued its uptrend, and this indicator has gotten back above zero and has been just sitting up here. So, market's back to acting like this rather than acting like this. Okay, so as long as we can continue to consolidate, or not consolidate, but continue to rotate up and down above zero, that will fully support the market's uptrend. As far as the cumulative line, obviously trend up, move sideways for a couple months, and now it's trending up again, so everything's on board there. All right, this next chart is the Nasdaq versus the 10-day moving average of the Nasdaq 80 volume line. Okay, so the last one was the 80 line. It lets all stocks speak equally. It doesn't matter if you're Apple or some small cap stock. All stocks get equal say. With the volume, with the Nasdaq 80 volume line, stocks that have higher volume get more say. It's still not perfect because you got some small cap stocks that could trade a lot of volume. You get some large cap stocks that are really expensive that don't trade as much volume, but it's pretty good. All right, so characteristic of an uptrend is you get mostly prints above zero. Okay, the indicator will oscillate above zero with occasional dips to zero or below zero, and that is characteristic of an uptrend. So there's nothing here that would tell us that something is that trouble is brewing. Okay, you do get occasional you get a divergence like this, and that leads to some sideways movement. Okay, that happens. And those are good warnings. We got divergence here, and then what happens? The market drifted higher, but then fell back. But as of right now, this indicator is in great shape, and of course, the cumulative line, which is down here at the bottom, has just been trending up for a really long time. It hasn't even dipped below its 50-day moving average. Okay, so whether you're looking at the 80 line or the 80 volume line, both are in very good shape. All right, now we're looking at S&P 500 up top. The top green here is the new highs among large caps. The middle is new highs among mid caps, and the bottom is new highs among small caps. All right, so during this dip here, we did get a drop in new highs, but since then, new highs have ramped up for large caps and stayed strong. They've ramped up for mid caps, and they've gotten strong for small caps. Okay, not as strong as over here. Okay, which tells us maybe there's room, more room to go. Okay, because even when we got high prints over here, S&P continued on. But just making the point that after a little bit of a soft patch over here, we got new highs among all market caps are printing at pretty good levels, definitely good enough to support the uptrend. No warnings here in the form of large caps printing new highs, but small caps not printing new highs. Everything's on board. Participation is pretty good. All right, now is same chart, except instead of new highs, we have new lows. Okay, you can see during an uptrend here, we got like almost no new lows among large caps, mid caps, small caps. Went through, we had an uptick in new lows here, over here, which kind of warned us that this is probably going to happen. Then it happened, and obviously we got a big uptick in new lows. Okay, but those are now falling off. I mean, as of yesterday's close, and these numbers are as of yesterday's close, we had 0 stocks in the S&P 500 hit a new low, 0 stocks among the S&P 400 hit a new low, and only 5 S&P 600 stocks hit a new low. Okay, so new lows are nowhere to be found. So that does, if there was a warning, the warning would come in the form of, market moving up, but new lows would be increasing. That might be a little bit of a warning, but it's not happening. So market's in good shape per this chart. All right, next one. So new highs, new lows, the last two charts talk about 52-week highs and 52-week lows. This one zooms in. This is the Russell 3000 1-month high low. Okay, so over the last month, or looking at today, how many stocks are hitting a new high minus how many stocks are hitting a 1 month low. Okay, so the blue line here is the S&P 500. The individual black dots are the individual data points day by day. So first I'm going to draw a line here. Here's your 0 line. Okay, so obviously when the market is doing well, as it was like over here just trending up, you get most of your prints are going to be above 0. Okay, and you can see, so we had a lot of prints above 0, not very many prints below 0. Okay, as we moved into here, we started getting more prints below 0. They pretty much equaled out, and that kind of warned us that we're probably going to have a little bit of a pullback. Okay, because as the market was moving up, we did have some stocks printing 1 month lows versus 1 month highs. All right, now want to point something else out here. I'm going to redraw that line at 0. The 500 line tends to be an important dividing area. In a healthy market, you don't need steady prints above 500, but if you can get a few random prints above 500, that tells you like the market is alive, the animal spirits are alive, that like you need those bursts of energy where a lot of stocks print a 1 month high. That builds momentum and the market can drift higher from there. Okay, so in the same way we got a cluster over here, we actually last week got a nice cluster too. Okay, every single day last week, there were 500 more 1 month highs than there were one month lows. So that's a good sign. It may be a sign that the market is like a little bit overdone in the near term, but that type of a print, those types of prints all happening in a cluster like that tells us the market is strong, it's healthy, and things are looking up even if they soften in the near term. So this chart says, market's strong, it's healthy, it's going up. All right, next couple charts are going to be number of stocks above certain moving averages. So I got S&P 500 up top. The middle pane here is the S&P stocks above their 20-day moving averages, and the bottom one is going to be the percentage of S&P stocks above their 50-day moving averages. Okay, so when the market is healthy, as you can see like here, you tend to get most, the horizontal line here is at the 50% mark. So you get most of the stocks are going to be, more stocks than not are going to be above their 20-day moving average. Ran into a little bit of an issue here where there was like a void of high prints. We had lower prints with some, spike downs, which told us that, less and less stocks were above their 50 or above their 20s. And this was followed by a pullback. So that was we can see that. Then we got some improvement. Okay, so I'm going to delete those. You can see market moving down here, and then you had this was improvement. Okay, so when the market moved to here, there were less stocks below their 20, and then it continued to improve from there. And right now we have a pretty good print. So as long as this continues to just kind of move up and down like this, above 50%, occasionally dipping below is fine. The market will be well supported. Okay, so after a warning here and a soft patch here, we seem to be back on track over here. With the 50, it's pretty much the same. We get a lot of prints above 50% here. Ran into a little bit of an issue here because we had no high prints and we had prints below 0. We ran into some trouble, but now we're back above 50% with some solid prints. If we get a little bit higher print here, that'd be good. If we can just move sideways like that, that'd be fantastic. But for now, we've absorbed the weakness that took place here, and we're back on track. Next up, Nasdaq up top. In the middle, we have Nasdaq 100 stocks above their 50-day moving average, and below that we have the Nasdaq stocks. Okay, so this is the Nasdaq 100, and this is just the Nasdaq. Okay, so the Nasdaq 100 are your biggest, highest quality stocks in the Nasdaq, but considering all stocks in the Nasdaq, there are some low quality stocks there that probably should not be publicly traded. So it's typically going to lag. So when you get divergences, they tend to warn you that trouble is brewing, mostly from the Nasdaq 100. So you got a divergence here, and that higher high, and then we got a pullback here, divergence here as a stock moved up, and you got a little bit of a pause here. Its upside momentum definitely slowed. Then you got kind of a divergence here where the market kind of moved up slowly, new high here, but the number of Nasdaq 100 stocks above their 50 was declining. So this led to this pullback here, and you can see down below that with the Nasdaq stocks, there's been a huge divergence. Okay, for like several months, most stocks were below. I should say, more than 50% of the stocks were below their 50-day moving average. But just recently, okay, this has fixed itself. We finally got a move above here. Okay, it's the highest print since way back at the end of June. Print over here is above 70%. So after a soft patch in here, where we got a warning that we weren't fully supported, and then we got an actual pullback, after that, we now seem to be back on track. Number of Nasdaq stocks above their 50 is doing better. Doesn't have to be doing great. It just has to be doing pretty good, because this is where a lot of low quality stocks are. And then number of Nasdaq 100 stocks above their 50s doing better, back up into the area that supports the trend. So things look good there. All right, so overall, market doing well, index is doing really well, breadth doing very well. It went through a soft patch for a few weeks or so, but now it's back on track. Overall, the market's doing great. Individual stocks, there have definitely been some blow-ups during earnings season. Some quality stocks have taken big hits after earnings, but overall, things look really good, and I fully expect them to continue. Even if we get some, there can always be a 1 or 2 weeks of weakness here or there, but even if that plays out, I fully expect the uptrend to continue into the new year, and then obviously we'll be evaluating things as we go. All right, good luck. Hope you got something out of this, and I'll see you next time.